Welcome to the Whitwam Wealth Real Estate Podcast. Today's podcast is Real Estate and World Gone Crazy.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. Welcome to this edition of the Whitwam Wealth Real Estate Podcast, Real Estate and World Gone Crazy. And today we are on a remote site as I'm doing some volunteer work. I was thinking about skipping this week's podcast altogether. And then Eric goes, hey, why don't we just do it on location and shoot it? I mean, for those of you who don't know Eric, he's behind the scenes. He's the guy that produces the podcast here, does a great job. It's a great idea. So you may get a little bit of background noise, car noise, whatever today, because we're just out here in a fireworks booth, actually raising money for veterans and youth as we're coming up on the 4th of July. And so I thought we would just shoot this podcast and act like this is how we normally do it. But it's neat being out here on this remote site. Here in Phoenix yesterday, it was a balmy 105 degrees, and that's actually cooled down from 116 last week. And so we got a lot of volunteers out here, some veterans, some of us non-veterans, but we're out here raising money for the Veterans and Youth Program. But I want to talk about what's going on in the world. I mean, in the last week to 2 weeks, things have really gone crazy just in the world. And the real estate market has been kind of crazy in and of itself. For those of you who have been sleeping under a rock, Israel and the United States have both dropped ordnance on Iran. And so now we've got a little bit of upheaval in the oil market supply, which means the energy supply. We've got some craziness happening in the United States' financial markets. We have a Fed chairman who seems to not believe reality. I don't know what it is with Jerome Powell, and I'm not saying that he should take some of the cuts that are being recommended out there of 2.5 points off of the base rates, because I think we'll get in the same boat we had when Chairman Powell decided to raise rates. I'm kind of more of a let's be a metered person. You know, I've gone into this year believing that this real estate market for us investors was really going to turn around, that interest rates were going to come back, that we were going to see some real change on our ability to pick up properties on the wholesale side of things, and that prices would seem to stabilize, and that this pent-up buyer frustration would start to work in our favor. And it seems like at every turn, all of the back-end data looks good. Inflation has come way down. It's back down to the lowest it's been since 2020. We see that the private sector job numbers have increased by over 1 million. We see that government employment has gone way down. We see that non-citizen employment is dropping and U.S. citizen employment is increasing. That's bringing more money back into our neighborhoods. We see that over 1 million people at this point have voluntarily left the country, and the current administration is offering money for people to leave the country if they're not here legally. There's a lot of things that are very sound in the economy, and at this point I would have expected that, based upon prior actions by the Fed, that we would have seen a small, slow rate reduction on the base rate, which would help our manufacturing and help companies with building, all these kind of things happening. But what we've seen is a resistance to move rates based upon an invisible fear. Chairman Powell came out, if you didn't see it, just last week, and said that the reason they're not lowering rates is because of the tariff policy. But when asked to explain how they came up with the logic behind how the tariffs are going to affect the economy adversely, where rates shouldn't be lowered, he doesn't have an answer. It's not based in any sound economics. It's based upon his thinking, or their thinking, that it may have some adverse effect. What has happened is over $60 billion has come into the U.S. Economy or back into the Treasury through tariffs. What else have we seen? We've seen that prices are not going up, hence inflation. We see that egg prices have come down. I remember when egg prices were all the rage. They've come way down. But what it's doing now is it's translating into the real estate market. So here we have a Fed, we got oil prices and we've got egg prices down. Even with all the turmoil in the world, oil prices are not that bad. They're just over $70 a barrel. For those of you who don't realize it, we need about $65 a barrel for U.S. to be profitable and be at maximum production with our oil reserves. So 70 is not that bad. We hit low 60s, and that was actually bad for the U.S. oil economy. So we've got all these things churning, and so now we got a more people back to work. We got a Fed who won't lower interest rates, and it is freezing the real estate market. In fact, home sales at the end of April hit the lowest that they have been since 2009. Think about that. The lowest they've been since the crash of 2008, back to 2009. The home sales are being held up by inflation. So we don't have buyers coming in. There is so much pent-up buyer demand if we would get interest rates back a little bit. And here's the other really crazy thing that's going on is inventories have accelerated. Inventories all over the country are expanding finally. It's not on a slow basis. So I'm here in the Phoenix market, and in the height of the real estate in 2020, maybe the first part of 2021, we had about 5,000 units in the entire MLS available for sale. Now we're about 5 times that. So inventory is coming back. The strange thing is inventory is coming back, but prices are still increasing. They're increasing about 1.3% year to year at this point, which is probably the slowest it's been in considerable time, way slower than it was in 2019 and 2020. So what we're seeing is that sellers aren't willing to sell because they have low interest rates, and they're not willing to sell at a discount because they don't want to trade that low interest rate for a higher interest rate mortgage. So like I said, things are pretty crazy. The other thing is for sellers who have extended days on market. So some of you investors, you know that you're suffering from this with extended days on market. Well, what we're seeing across the country is that sellers who have to sell, not want to sellers who've got 2.5%, 3% mortgages, but have to sellers are getting relocated for a job. House has been on the market 90, 120, 150, 180 days. Now they are negotiating. In fact, as case in point, we just had a property that 2.5 years ago, homes like this one were selling for $40,000 more. Fact is, we had come up with a price on it, and he waited a couple years, called me, said, hey, I need to sell this property now. So we put it on the market where a little bit below where we were because things had pulled back a little bit. All of the offers we've gotten were $40,000 lower. So, but he's in a position where he can move this into another investment, and he's probably going. Fact is, I know he's going to sell this thing for this because we've got a counter offer. We're just waiting to get it signed and sent back to us. And so for $40,000 less than where he was just a couple years ago, and probably would have been. So anybody who's holding properties longer, so some of us as investors, some of these properties we're holding a little longer, we've had to get a little more realistic about the sale price, even though the average sale price has increased. You know, those are typically the best houses and the best locations for the best prices. They're will move a little quicker and they'll hold their value. Some of these properties that have been on the market for a while, you know, we're giving up seller concessions, we're buying interest rates down, we're doing those kind of things to help bring some of these buyers in so that we can attract them to the properties. And I know from talking to you, my coaching students, that you guys are dealing with this. And the same thing on the brokerage side. That's why it's so crazy. Here the first quarter of this year, things started to just, skyrocket. Agents were back in it. We saw contracts coming into the brokerage again. We had agents who were excited about being in real estate, but now I'm getting the calls from agents again. Hey boss, what are we going to do? What am I doing wrong? What should I be doing different? But the whole market has changed. And really, I'm going to lay a lot of this on Chairman Powell's back. because I think the bond market is looking at Chairman Powell and the Fed as a whole, their resistance to lower interest rates on the bank-to-bank rate. And I believe that it's helping to keep bond market. Now, I know I've talked to some friends who are financial advisors and say, well, the bond market reacts, to the economics. But I'm telling you, the bond market is not reacting as it normally would in this case. That's why I'm saying this is not only, real estate gone crazy. This is the world gone crazy. I mean, things are just not the way they should be. But here's the good thing. Even after listening to the National Association of Realtors CFO, and he was saying that he still believes it may be longer now because of the approach that the Fed has taken. It may be a little bit longer now, but that things will get stronger probably late in the fourth quarter. This is a good time if you have an opportunity to buy. Just always remember the numbers. That's what will this property look like if I have to hold it a little longer? Maybe I got to try to get a little bit deeper discount if I'm going to wholesale this to somebody who's going to flip this property. What am I going to need to do to hold out? At least the rental market has been okay. We're seeing longer days on markets to get people into rentals too, as if people aren't moving. But we just got to look at the numbers, because again, this is a market where not only is the real estate market a little bit crazy for us, whether you're an investor or a realtor, but it's just crazy. The whole thing, everything that's going on in the world has just gone really crazy right now. We don't know, what's going to happen. We don't know Iran's response. We don't know what Russia's going to do. I mean, they're tied up in Ukraine. We know China is flexing its muscles in the Taiwanese Sea. So we don't know. Things are a little bit crazy, but I wouldn't abandon your plans. Just make sure that you're much more cautious about them. And, and sometimes if you miss a deal, making sure that you're protecting yourself, that's not a bad thing in a real estate market and world that's gone crazy. All right, that's it for today. I want to thank you for joining me on the Whitwam Wealth Real Estate Podcast as we're here on this remote location. Be sure to check out our other episodes. We got a lot of other episodes related to real estate investing, and we'd love to have you subscribe and join our growing family. Remember, you can always catch the Whitwam Wealth Real Estate Podcast on Apple Podcast, YouTube, iHeart, Spotify, or wherever you enjoy listening to your podcast. This is Scott Whitwam reminding you that we are wealth building through real estate.